Hello everyone, and welcome to our mid-year market update. I'm Angela Palacios, partner and chief investment officer here at the Center for Financial Planning. Joining me in a few minutes will be Nick Boguth, senior portfolio manager, and Mallory Hunt, portfolio administrator. As the summer season and midterm election cycle heat up, financial markets have rallied for the quarter, despite a challenging start to the year driven by the U.S. Iran conflict. From excitement surrounding the SpaceX IPO to the swearing in of a new Federal Reserve chairman, investors have certainly had plenty of headlines competing for their attention. While geopolitical developments continue to create periodic market shocks, overall volatility has moderated. Although the conflict involving Iran has lasted longer than many anticipated, key indicators suggest the U.S. economy remains on solid footing. Since Memorial Day, market momentum has slowed somewhat as stocks have approached record highs. Historically, this isn't unusual during a midterm election year. In fact, about half of midterm election summers have experienced some negative returns, with the S&P 500 averaging declines of nearly 3% during these periods. Much of that uncertainty stems from campaign rhetoric and investor concerns surrounding potential changes in policy, taxes, regulations, and congressional control. However, history also shows that once election outcomes become clearer, markets often shift their focus back to economic fundamentals. The 12 months following midterm elections have frequently produced stronger returns for investors. While history never repeats itself exactly, it often rhymes. We'll be doing a special webinar this fall leading into the election to give a more in-depth look at the markets and the election process, so stay tuned. In the meantime, the most important approach during election years and periods of uncertainty is to remain focused on sound investment principles, stay diversified, rebalance when appropriate, avoid emotional investment decisions, keep your focus on long-term goals, and maintain adequate liquidity for near-term needs. Now I'll turn it over to Nick, who will be highlighting some of the key headlines for the quarter.
Thanks, Angie. No shortage of market news this past quarter. We'll start with the big IPO news. SpaceX raised over $75 billion. And AI leaders, OpenAI and Anthropic, announced they'll likely be going public later this year. At SpaceX's IPO pricing, it was trading near a $2 trillion market cap, which would put it in the top 10 holdings of the S&P 500. But it's not joining the index anytime soon. They're not profitable yet. They lost about $5 billion last year, and they haven't been public for a full year. Two key rules keeping it out of the S&P 500 for now. On the geopolitical side, the Iran situation kept markets on edge all quarter. All the back and forth attacks, ceasefires, and threats around the Strait of Hormuz had oil prices jumping and volatility spiking in March. But stocks powered through it. Classic reminder to stay focused on the long game and stick to your plan. That discipline helped us manage through the noise and gave some decent rebalancing opportunities. Finally, new Fed Chair Kevin Warsh kicked off his term pretty quietly. No rate changes as expected, but he let us know he won't be participating in dot plot projections, which is different from prior chairs. And June's meeting showed the committee is leaning towards higher rates for longer. Warsh is also rolling out some new initiatives to adjust the Fed's focus going forward. So we'll continue to monitor and determine if there may be any meaningful impacts to the bond market and our portfolio's positioning. Now I'll hand it off to Mallory for some final updates.
Great update, Nick. In our What Matters Most webinar, I had the opportunity to collaborate with planner and partner Callie Hassinger. Together, we explored a simple but powerful idea. The most effective financial plans start with your values. Rather than focusing solely on investment returns or account balances, we encouraged participants to think about the people, experiences, and goals that give their lives meaning. Whether it's family, financial independence, giving back to your community, career flexibility, travel, or leaving a legacy, Understanding what matters most can provide a clear direction for financial decision making. Many people make financial decisions based on what's happening around them. Market headlines, economic uncertainty, or what friends and colleagues are doing. But when your financial choices are tied to your personal values and long-term goals, you're more likely to stay focused, confident, and intentional. During the webinar, we discussed how identifying your core values can help create a roadmap for your financial future. From setting meaningful goals to prioritizing spending and savings decisions, a values-based approach helps ensure your money is working toward the life you want, not just the life others expect. We also highlighted that financial planning is not a one-time event. As life changes, your priorities may evolve, making it important to regularly revisit your goals and confirm that your financial strategy still reflects what's most important to you. Ultimately, financial success isn't defined by how much wealth you accumulate. It's defined by how effectively your financial resources support the people, experiences, and passions that matter most. If you've never taken the time to connect your values with your financial plan, now is the perfect opportunity to start. When your finances align with your purpose, every financial decision can become more meaningful, intentional, and empowering. That's all from us this quarter. If you have any questions about your portfolio, your plan, or what today's markets mean for you personally, please don't hesitate to reach out. We're always here to help. Thank you for watching, and we'll see you next quarter.